Hello, everyone, and welcome to today's webinar. I am really excited to be joined by Sarah Hayes. She's a fabulous money coach, business finance mentor, and we're going to be talking to you about debt. A lot of people don't like to talk about it, but let's see if there's some ways that we can help you during our time together. So, just to start off, a little bit about myself. I'm a financial advisor. I help empower people financially, help them along their financial journeys, and provide down-to-earth, easy to understand, no nonsense advice to help you get control of your money. Over to you, Sarah.
Yes, thank you. I am Sarah Hayes. I am a bookkeeper, financial coach. I've worked in and around money for most of the last 25 years, having had a background in retail banking. I've been working with small businesses for 9 years. I'm a certified financial coach who added this to my business in March this year. And I'm passionate about helping people get real with their finances and understand the emotion around the money. It came about because I have a particularly turbulent history around money, and debt is one of the subjects that I know particularly well. So it'll be a really interesting discussion to have around some of the emotion that comes with being in debt. So I'm looking forward to this.
Great. Shall we get started and really just start thinking about, you've already touched on it, to be honest, Sarah. So shall we just get cracking and just start talking about it?
Yes.
Brilliant. Because that's the first thing, isn't it, actually? It's just talking about money, talking about debt. It feels like it's a really big hurdle to cross, but a lot of people just don't feel they can even talk about it or mention it.
Yeah. And from my point of view, I had a massive debt problem. Some of it was my own doing, which I'll come to in a bit. And some of it was the fact of, in the last recession, my husband ended up in a position where he had to go self-employed. And as a lot of us know, self-employment in the beginning is practically the same as no employment. So there's very little money, there's very little to go around, and you do end up borrowing to make things happen when you're given the choice of, do I feed my children or do I clothe my children? So it does become almost a catch-22 situation where you have to borrow. But there is a lot of guilt and shame that goes with that. And a lot of that comes down to the fact that we're all told when we're kids and we get given our pocket money by grandma, it's like, don't spend that all at once. Don't spend more than you can afford. And that gets ingrained with us. And there tends to be two camps. There are the people that don't spend it all at once and actually probably don't spend anything and stash everything. And then there's the camp that, life's for living, let's spend it and we'll worry about it afterwards. But I know from my situation, having been £45,000 in debt with 2 small children and no job, that there's a lot of guilt and shame around it. And there are lots of ways that you can get out of that situation. But even once you're out of it, that doesn't necessarily go away. That feeling doesn't go away because you've broken every rule that you've been brought up with. That don't spend it all at once. Don't spend more than you can afford. Rule.
Yeah, our upbringing can really have a huge impact on our money personalities and how we feel about different concepts and everything, and just don't realize it. But I guess that still comes back to talking about it, because then once you start realizing where this all comes from, where the roots of everything is, and just sharing it as well can be really helpful.
And a lot of our money narrative comes to us before the age of 6. They're things that we're brought up with, the things that we're told, the things about money goes to money. And, the whole process of money doesn't grow on trees and you have to work hard and all of those things. They're all things that we hear from a very, very young age that we don't have the cognitive ability to challenge. And they become part of our makeup. And as we grow, and we have other outside influences with friends and family, and we then hit the world of work and actually go, I want to do this and that, but that goes against what my background is. you then end up in this battle with yourself. And that's where our money narrative comes from. And that's why a lot of people do carry so much guilt and shame. And the fact that debt is a big thing. It's a big taboo thing. We don't talk about how much debt we've got. It's a secret.
Yeah. So what can people do? I mean, okay, we've just said talk about it, but really if someone's watching, or what would you say if someone comes to you and they're in that situation? What are the first steps to kind of just start to kind of get to solving the problem or to feeling better?
So we need to establish what sort of debt we've got, because debt is different. We have debt that's constructive. We have debt that, you know, helps us grow and move forward. So things like mortgages, commercial loans, student loans, they're things that help us move forward. They're debt for a specific purpose and a specific outcome. Those things are constructive, and those things are absolutely fine. And all debt is absolutely fine. It's about how you position it. Debt, when we're building debt, mindlessly is probably the best word I'd use. When we're running a debt to feel an emotion, we're either trying to run away from emotion or run to an emotion. So we're either trying to, how many times have you gone and gone, oh, so I've had a really rubbish week, I'm just going to go and buy myself something nice just to make myself feel better? That's an emotional spend. Or how many times have you done something and gone, that was amazing, let's go out for a fancy dinner? And again, it's an emotional spend. And both of which are absolutely fine if the money's there. And believe me, I am the first to say we should celebrate our wins. But we need to celebrate our wins in a way that doesn't make our situation snowball even more.
That's
so the first thing I'd say when we start looking at how do we clear debt is we need to look at how the debt is run up. What is the emotion that comes to us when we buy something? Especially when we buy something on the spur of a moment. Do we feel excited? Do we feel guilty? Do we feel shameful? Do we sit there and go, oh God, I'm going to have to stash this in the wardrobe and pretend I haven't got it and pretend I've had it for ages when he asks me a question about it or she asks me a question about it? We've all done that. Are they new shoes? Oh no, I've had these in the wardrobe for ages. That sort of conversation.
I hear that a lot. Have a lot of clients. They may come to me after just finding out that a partner or someone's built up a lot of debt, or it's something that during, you know, the clients come out with and go, I've just discovered this. And it does feel that a lot of cases it is something that just takes a lot of time for it to be acknowledged. I think first of all it needs to be acknowledged by the person that's got the debt as well, and once they acknowledge it, it's then them sharing it, and then of course then the next thing is talking to someone else about it. But I do see it quite a lot actually, where exactly that happens.
Debt between partners is always a recipe for disaster. If you run a household income, debt between partners is a nightmare. And as part of an ongoing sort of solution and to becoming more open and mindful when we're talking about money, I would always suggest that you had a money date, both with yourself, where you sit down and look at your own spending and your own spending patterns, but also how you then look at that with a partner. If you're in a household and you're sharing bills and food and, you know, the day-to-day living expenses, if you're sharing it, you should have a regular conversation about the money that comes into your house and how that money's spent. Not saying that you can't have your own money and your own pots of money to do what you want to do with, but if you're in a household with joint expenses, you need to have a joint conversation.
I love the idea about a money date. It's something that Mr. Haynes and I do very often. I'm not saying it's his favourite pastime, but it's so important to have these regular conversations and to share. I think it helps helps the partner understand what's going on, but it also helps yourself to just talk about it and talk through everything, and just depending on that situation. Because I think most partnerships are probably quite unequal with regards to understanding and probably like money beliefs and how they view it. So as you say, partnerships can really be a force for bad unless you try and use it to the positive. So money date, love that idea.
Especially if you're coming at it from a very different place to your partner. So if you've got a background of scarcity and money's going to run out and there's never going to be enough money, and the world, this is my little world, and that's it, and this is my pot of money and that's it. And then you've got somebody else that's going, wow, payday's next week, we'll just pay for that next time. And you're coming at it from two different angles. Then you have got that situation of, oh, you're pulling against each other. You're not fighting from the same song sheet. If you're coming at it from two different places between you and your partner, if you're of a very sort of scarcity, the pot will run dry, there's never enough money, there'll never be enough to do what I want to do. If that's your outlook, there's absolutely nothing wrong with that. But if your partner's outlook is living payday to payday, well, there'll be more money next month. We'll just do that. We'll pay for it next month. We'll do that. We'll pay for that next month. And that's their attitude. You're fighting a losing battle with each other. So to have a money date and to sit and get clear about what, as a household, your objectives are, then that is enlightening on its own. And you gain power from that awareness of, this is our situation. This is how much our bills are. This is how much we need to allocate for this situation.
Yeah. So that's quite helpful as well. And I like that idea. So for those just joined us, money dates, if you've got a partner, definitely if you've got joint household finances, money dates are important. That's great. Is it worth talking about ways to almost kind of like shore up your finances whilst, whether most people have debt, right, Sarah? So most people do have debt, but one way to kind of help against the potential build up of it is if you have a rainy day fund, an emergency fund, having some money that's not just in your current account or in an easily accessible. You want it in an instant access or an easy access account, but you do not want it to be easy to just be tempted for, as you said before, for those emotional spending times. So having a rainy day fund is important because that can also help avoid kind of creating debt, going into overdraft if something does happen. And we've seen over the last 2-3 years that things can really happen that you don't expect. So having a buffer is really important.
And what I'd say on that is the fact, if I see it so many times where people have debt, credit cards, loans, whatever, and we sit down and we work out a plan to clear the debt, no problem. We do the budget, we work out how much we can pay off, we deal with all of that. And then something happens where the boiler breaks, or you need a new tire on your car, or something happens like that you need to find the money for. And if you don't have a rainy day fund, where is that money going to come from? It's going back on your credit card. So people become so obsessed with clearing the debt and being debt free that they miss that point. And ultimately, the idea would be, as a better solution, would be to clear the debt at a slightly slower pace. But while you're clearing the debt, you're saving for a rainy day fund. So that if you then end up with a situation, as I've got at the moment, I've got no hot water at the moment. I've got to have a new boiler.
Oh no!
So I've had to find nearly £3,000 for next week for my boiler to be replaced. But because in clearing my debt, I'm also saving, I have that money. It's not going back on my credit card.
Yeah.
And that's where you have to become mindful of, yes, I want to clear that debt. People get, right, well, if I pay this and this and this and this and this, I can clear that credit card by the end of the year. Fabulous. But what? But what if? What if there is an emergency situation? So take 18 months to clear it rather than a year to clear it, and put some other money aside so that you're then building a rainy day fund that will pay for a boiler or a tyre or your kid's school trip or whatever else would have ended its way back on your credit card. And this time of year, sorry, I'm going on a bit now, but this time of year, especially with Christmas coming, it's really a good idea to save money for Christmas a bit each month. We all know what we spend on Christmas. But if you was to put 25, 30, 40 quid a month away, effectively £10 a week away, by the end of the year, you've got 500 quid. That goes a very long way towards Christmas. And
That's
£10 a week. Do we miss £10 a week? I know, I get in some cases, yes, £10 a week is a big thing, but it's still easier to find £10 a week than it is to find £500 in December to pay for Christmas.
Absolutely. And actually what you've highlighted, I love that. I love that idea, the Christmas fund and paying for things in advance. But also just making sure these things aren't mutually exclusive. It doesn't mean if you've got debt, that has to be paid off at the expense of absolutely everything else. You can run in parallel. And actually the next slide has kind of like, it's an order of priority in terms of if you're in a situation paying off expensive debt should be a priority to pay off, but it doesn't mean that you can only go to the next stage once the first stage is done. It's important to see, look, what's the most important, what needs to get your focus, but you can do more than one thing at a time. And in fact, that's important because if you're not doing more than one thing at a time, chances are you may really struggle to get to the next stage because things will always start happening. Think life does get in the way, and things can go wrong. So that's really good ideas, definitely when it comes to that. So you were talking before about different debt for different things. I mean, what are your thoughts on obviously like overdrafts and credit card debt? That's what we mean by paying off the expensive debt. But what are your kind of thoughts on that? For some people, they don't have the option. They may be able to get 0% on a credit card, even if it's for a limited time. But any kind of thoughts on that? And when you are looking at debt, what's the best kind of options as well?
It's always best to look at the getting debt in the cheapest way, without a doubt. So if you can look at 0% options, I'm not sure how many are still available at the moment. I know a lot of them were withdrawn a few weeks ago when the markets went completely loopy. But paying off expensive debt has to be the priority. You start with the expensive ones first. I mean, ideally, you know, none of us want debt necessarily. It's not a place that any of us aim to be in, but things do happen and we do have to do stuff in that way, but paying it off as quickly as possible. So if you're buying something that you need, and that's the difference between wants and needs. And there's a massive difference between wants and needs. If it's I want, and we're doing it online, give yourself a 48-hour calling off period. If you still want it in 48 hours time, go for it. But
we have that 3-day rule here. If you still want it in 3 days, it stops those impulse and a lot of those emotional buying that you were talking about right at the beginning, doesn't it?
And expensive debt is often run up as a response to emotion. It's that's £20 off. That's a good buy. We'll have some of that. And sometimes, yes, that is what needs to happen. But often it is that impulse purchase. So I can't really afford it, but it's payday next week. So I'll pay that off. And then payday arrives and we've forgotten about it until the bill comes 2 weeks later. And then you're right back in that situation again because you've forgotten to pay it off. Expensive debt you need to review expensive debt and try and move it to other play. And there is nothing wrong with playing the credit card chasing game of chasing a 0%, as long as you close off what you've just cleared and moved. The other thing you need to consider with expensive debt, credit cards, etc., is the fact of, yes, you might be able to get a 0% deal, but there will be a fee to transfer that to a 0% deal. So you need to weigh up. So, okay, I might get a year free, interest free on this, but it's going to cost me 60 quid to do it. Would the interest on this over a year be £60? It's just weighing up that situation. Absolutely. So there's lots of things to consider with credit card and overdraft debt. Always check the APRs. On the TV, you will see people offering credit cards for people with debt problems. But if you look at the APRs, they're like 4,000%.
Do you want to explain an APR? Do you want to explain that? Because I think what happens is a lot of people are blinded by the jargon and by the complications. And also, so a lot of clients of mine that have got credit card debt, if it's not on 0%, they just don't know what the rate is. And they just don't realise that it could be 20% plus. And if they're paying off the minimum, it actually means that they may never ever pay it off, and they may actually be building up over time. So it will be great. Would you just explain it a little bit, what it means?
The APR is the annual percentage rate. And all of these credit cards are all done on a daily rate. If you was to clear it tomorrow, you only pay the interest up to tomorrow. But if they average that out over the year, you can end up with a massive interest rate. And say that I think the biggest one I've seen recently was 4,982% on a payday loan. Because of the way it works, if you're in a debt situation, you're a bigger risk. If you're a bigger risk, they will charge you more for the privilege of it. By charging you more for the privilege of it, it costs you more in interest. And as Naomi quite rightly said, if you're only paying the minimum payment, your interest will be more than your minimum payment. What I've done previously, and what I actually did myself when I first started trying to clear my debt, was I paid my minimum payment plus the interest plus £5, because then the debt was reducing.
That's a great formula. And also, I think what that also does is allows you to look at it, to know what is the interest, what is the minimum payment, and how is this looking, so that not only do you know that you're paying back your debt, but actually you're in control because you understand what's going on. Knowledge is power. It's so important. That's also why at the beginning, when we were talking about the importance of talking about money, talking about debt, because what it actually does is that it helps you process it, digest it, understand it. And if you can do that, then there is suddenly an element of control that's coming back to you. And particularly with debt, you aren't in control in a lot of cases, in most cases, because you are in that situation because you've there is an element of maybe you've lost control or understanding of what's happened of a situation. But by doing exactly what you're doing, by applying that formula, you've got the control. As you said, it's not always bad to be in debt, but no, and if you've got that trajectory and that formula, then you're back in control and you're doing something about it. So that's great.
Situation becomes tricky when you can't cover your interest payments. Yeah. That's when it becomes a problem. And that's when I would say to people, get help. There are companies out there that can help you for not very much money. When we was in debt 10 years ago, we was with a company called PayPlan who set up a debt management scheme for us. They're now called Step Change, but they were brilliant. And just by talking to somebody who will help you through the situation without judging you and go through your plan, go through your budget, go through what you're earning and what you have to spend, because we have to make sure when we're clearing debt we have to make sure that we are covering our essential costs. So anything that could land you either homeless or in court. So when you do a debt management plan, they will make sure your mortgage is covered or your rent is covered. They will make sure that your council tax rather, is covered, because those things are non-negotiable. You will end up in court or homeless as a result of those. And that's never anybody's plan. If you have a lot of debt, they will help you prioritize your debt. They will negotiate with the companies to help reduce your payments. And very often they will hold, if you've got a formal debt management arrangement in place, your interest will be reduced massively because they recognize you're in financial hardship. No one wants to take everything you own. No one wants to put it into a position where you have literally got the choice of feeding your children or being homeless. No one wants that. So they help you put your priorities in place. And as long as you're talking to the debt management company or to the companies directly, because even if you went to each credit company directly and said, look, this is my problem, this is my situation, how can you help me? They will reduce your payments to help you cover the arrangement. And as long as you stick to the arrangement, that arrangement can carry on. It will be reviewed every year, but it will carry on, and they hold the interest. And if you do it through a debt management company, they do get to a point where they can negotiate clearing your debt at a much reduced rate for you. We ended up wiping out a whole big chunk of our debt because they negotiated on behalf of us to settle the debt with what was left. So don't put your head in the sand is the biggest thing I can say when it comes to debt. Yes, you might feel awful. Yes, there's a whole bucket of emotions that come up at that, because the biggest thing is fear. The biggest thing is we are in a situation where we can't afford to live. But there are people that will help you and will help you massively.
That's fantastic. So it just shows you that along the way, there's lots of different things you can do. And where, even if you get to a point when you think this is unmanageable, that's just wrong. It is manageable. That's why I've got the next slide up, because obviously there can be things that you can do before getting to that stage. Yes, there's help. But you were talking about, obviously, debt management plans. They can help you with that budgeting, with that prioritizing what needs to be paid versus, what can be paid. But I think it would be great to just chat about how can people help to not get there. I talk a lot about the importance of, I know they called it budgeting, but I've heard of it called as, you can call it what you want, but a spending plan is sometimes a little bit less intimidating. I like to say just decluttering and almost like spring cleaning your finances. I do that. I go through my bank statements. I'm always making sure, first of all, do I know what it is? Then if I know what it is, it's, do I need it? If I need it, am I paying the best price for it? And just kind of going through, even for someone like me who's regularly doing that, I am also regularly saving money, finding things out and going through and filtering things out, so that every so often I am saving tens and sometimes even hundreds of pounds per month just by regularly checking things through. Have you got any thoughts on that as well?
Yeah, and that goes back to our money dates. That
Yes.
is very much about going back and sitting with your bank statement. And it's really eye-opening. Yes, as Naomi said, there are the things that we sign up for. The biggest things are nearly always when we take an insurance, we buy a product, laptop, cooker, toaster, and the salesman in Currys says, would you like accidental damage cover with that? It's £2.50 a month. And you go, oh yeah, it's £2.50 a month. Yeah, whatever. And then all of a sudden you realise you've been paying that for 18 months and you're never likely to use it. And on a toaster, it would be cheaper to buy a new toaster than it would be to insure it. So those things nearly always come up when we look at bank statements.
And also you tend to be paying them way beyond when you've gone and got a new toaster or a new laptop, and
this is it.
And then you don't know what it is, so it's all just there, and it can really build up. So
don't get me wrong, sometimes on big things insurances are worth it. My new boiler will be insured. Yes. Because a call out on that is expensive. This boiler is not insured because it's too old to be insured now. The insurance on it was so much money, it was like, it's probably not going to get covered anyway. So we didn't do that. But the small things that we buy that they offer us insurance for, they're not always worth the insurance. So have a look at those and see what you've got. The other things that when you're looking at budgeting is it's so easy now, Mr. Apple Pay, when you just tap, and you sit there and you look at it and you go through your bank statement, you're like, oh my God, I've spent 50 quid in Costa and I've spent X amount of money in Home Bargains or in Tesco's. And it's about being aware, because a lot of us don't actually use money anymore. It's very easy to tap our phone, tap our card and move on. It's not like we've actually spent it. But when you sit and look at your bank statement and you realise just how much you've spent on coffee and cake, and I'll be the first to admit I do that quite often, it becomes eye-opening.
I recommend actually people using top-up cards, not credit cards, not bank cards, top-up cards. So you basically load your credit card. I've actually got one right here. You load them up with the amount that you want. So if you've got £20 on it, then you can't spend more than £20. And if you do end up just tapping it away, then that £20 will go, and suddenly you'll be like, that was supposed to be for petrol, although obviously £20 isn't really going to get us very far in our cars. But having or different methods that can kind of help, because I agree with you. With me in particular, it's all on Apple Pay or the watch, so it's all just going through, and it really can go away with you. And just like you said at the beginning, it makes emotional spending much easier. Which is why I love that your 48-hour rule, it's the Haynes 3-day rule, or the different rules that you can have, just to try and help let you take a deep breath and really think things through. And I do find that that's a really good way of saving.
The other thing that is really popular if you're on TikTok or on Instagram is, and it's kind of come full circle, because I remember being taught this method when I was a student. I remember my mum going to me, you've got this amount of money, this will pay your bills, whatever's left, draw it out in cash, put it in an envelope. That's for Christmas, that's for your car insurance, that's for this, that's for that, that's what you've got left to spend at the end of the month. And we can do this online with pots and spaces depending on your bank account. But the youngsters have gone old school, and they are, if you go on Instagram or on TikTok and you search cash stuffing, they are drawing out cash and sticking it in envelopes, which I wouldn't necessarily say is the safest way to be doing things. But it just, to me, just seems like we've come full circle. You know, I don't know, we've spoken about it before, Naomi, where like your nan used to have little jars on the worktop. Yes. That was for the window cleaner, and that was for Christmas, and that was the kids' pocket money. And it's almost like the kids have come back round to sticking it in folders. Obviously,
my youngest won't let me put it in the bank. It's just got like cash on the side, and that's great. Although when you were talking about the different types of, some people just spend it like there's no tomorrow, others just can't spend it. I've got 3 children, and I always talk about how it's really interesting. My youngest will not spend money, so that cash builds up on the side, and she almost is like emotionally attached to the cash and doesn't want to spend it. So very difficult on that one. My son just, it goes in, if he knows if he's got it, it goes out. It's just spend like there's no tomorrow. And then my eldest daughter, she's just got that balance. It's quite funny. So I've got all the different like money personalities with my children, but it is just really interesting, and it causes challenges as a parent as well, trying with their upbringing, because one of them, I'm trying to encourage them to spend money, because it's important to know that it's safe and it's okay, or else it will lead to problems later. The other one, trying to teach that 3-day rule, or that kind of that there. And then of course I've got the one who is a little bit more balanced on it, which is kind of where you're trying to get the other two too. So,
but that's where we then take those money beliefs that I spoke about at the beginning, and how each person processes those and interacts with those in a really different way based on their perspective of life. And there's absolutely nothing anyone can do about that. It's about how they've experienced life, and it is how lots of people say I've got multiple children, they're all brought up in the same way, but they've got such different attitudes to not just to money, but to socializing and food and everything that makes us human. We all interpret it in a different way.
Yeah. Should we talk about, because you were talking about insurance just before as well, and actually that was on my kind of list of priorities. When you think about, there's different sorts of ways, insurance, like you're getting insurance on your boiler, that makes a lot of sense, because what could actually happen is, yes, thank goodness you had a rainy day fund, thank goodness you had that, which means that your boiler's not going to put you in more debt. But then of course, if you don't get insurance on it and something happens, then that debt can easily come. So it's all about finding these buffers, finding these ways that can really try and help us in the future. And what we've got with different forms of protection is exactly that. Now, protection, what I'm talking about, things like life insurance. I've found a lot of people have been really, really good with their money. They managed it really well. They've had their money dates and everything, but aren't properly protected against really the risk of something happening to them or their partner that can have really far-reaching and quite impactful financial implications for the rest of the family. And it's really interesting. I've just put up here just some statistics. Now, they are just statistics, and they're taken from I think a risk reality calculator online, but that if you're looking at a 40-year-old woman who's going to retire at the age of 68, over the next 28 years, there's 44% likelihood of something happening that would be really damaging to hers and her family's finances. So as you can see, there's death, there's serious illness, and not being able to work for 2 months. So that's almost like that's almost half, a 1 in 2 chance of something happening that's going to impact you financially. So all I would say is looking at different protections, and you can get them in many forms and types. Different types of insurance can make sense, just making sure that we're prepared. And actually, one other area that can impact people is a lot of people don't have a will, or they think they've got one, and then they've gone and got married, or something's happened, and actually their will is then invalid. So all I would say just to people again is have a look and just make sure that you've got those protections in place, so that even if however things are going now, it's also important to future-proof yourself and your circumstances and your family. So I've put here, you can't predict the future, you can plan for it. And I know things like cost of living crisis that we're going through now, it's very difficult, but there are just some things it can do. And that's kind of what we're here to talk about as well, isn't it? It's just to see how people can just help themselves and their families in the future.
Totally. And it goes back to those priorities. I think people also think that life insurance is expensive, and it's really not. It always amazed me when I worked in the bank. You'd go through people's bank statements, and they'd be insuring their Sky Dish, and they'd be insuring their laptop, but there's nothing to insure their life and provide for their children. So it's about a priority, but it's also about the fact of we don't like talking about death because of the emotion that it brings up. And actually, if we tackle some of the emotion, because ultimately the emotion it brings up isn't an emotion for you. You're not here. It's not an emotion you need to deal with, but it is about making sure that your family are provided for. And in the event that you're not there to deal with their emotion, that's one less thing for them to worry about.
It's so true. And you've just brought up the subject that during my most recent money cleanse, decluttering, kind of looking through my bank statements, I had a look and saw that our Sky box, our Sky Protect, is just over 50% more expensive than income protection I sorted out for one of my clients to cover her income in the event that she's too sick to work for longer than 3 months. And actually, as you say, it puts it in perspective. And actually, when I was looking at that and putting it in perspective, that we're going to be obviously saving some money through, because actually, relatively, you can have a look and go, yes, I do watch TV. Yes, I do watch Sky. But actually, have a look at how much you're paying and just think, how does that compare to actually maybe covering myself if something happens if I'm too ill to work? I can do without the TV if something really happens, but I can't really do without food, as you were talking before, food, clothing, housing, mortgage, and all of that. So it is important to try and look at it over priorities and relatively. I also just talking about different things. I did want to put in about pensions. Obviously, if you're in a lot of debt, kind of putting money into your pension may not make the most sense. But just a few things, as you know, Sarah, I'm really passionate about pensions. I think they're really powerful. They are ways that you can save on tax because you get tax relief. So they are a good way of saving. They're also a really good way of looking after your future self or your family in the future. But importantly, if you have got yourself, or if you do in the future get yourself into a situation with debt mounting up, pensions are separate from your finances when it comes to bankruptcy. So actually, they are quite a nice way of also saving that if things do happen in the future, people can't go and claim from your future pension pot. So I think that is something, and also it's important that everyone works really hard throughout their lives, and if you do have debt, or if you are in a situation that you manage to overcome, when you do stop work, it's important to make sure that you've got enough money to see you through a very long and happy retirement as well. I did also just want to quickly mention, if you're a business person, having a limited company can also help, because there are separations between what happens in the company and what happens with your personal debt. And finally, actually, Sarah, because we were talking about this before, credit scores. These are really important. I do talk to clients a lot about these, depending on their situation. But I think it's really, really important to regularly check your credit score. You can sign up for free to the credit agencies. I have a subscription. I don't even know if it's a subscription. I don't pay anything to Credit Karma, but I get regular emails from them at least every month, just to say, have a look at your credit report. But also, something changes, they send me an email, so I have a look. That's really important for two different reasons. First of all, a lot of people can get themselves into debt through no fault of their own. That can be due to fraud, due to scams. So it's really important that you keep a check on your credit report so that you know if anything fraudulently is happening with your bank accounts and with your identity. It's really important from a point of view of like that whole money day, or that talking about money, understanding what you've got. That helps you get control. If you look at your credit report, understand what it means and what you've got, that is very powerful and can help you keep control of your finances. But also, the better your credit score, the lower interest rates are if you did need to take out a loan or a mortgage or anything, because as we were talking, not all debt is equal. And just keeping an eye on it can help you maintain a really healthy financial situation. Sarah, do you have anything to say about credit scores and reports?
The thing you need to remember with credit scores is your credit history stays on your record for 6 years. So if you are in financial problems and you are looking at going down the route of getting extra help, and the reason I looked to do it in the way that I did and going for a formal debt management plan is, once you have a formal debt management plan, any arrears on your record don't show on your credit file, because they're not part of, you haven't defaulted, you haven't missed a late payment, you haven't collected a CCJ, you haven't
CCJ, do you want to tell people?
County court judgments. So they can stop you collecting, they can stop you getting debt, they can stop you getting jobs, they can stop, county court judgments can have a massive impact on people's lives, and they're the last step before bankruptcy. But if you are in serious financial problems, make sure you talk to people when you get help with that, because once you have a formal arrangement in place, it doesn't show on your credit record. If you do it outside of an arrangement, you will collect defaults and late payments on your credit file, and they sit there for 6 years. And 6 years is a long time. You know, your situation could be what it is now as a result of the cost of living, but you then could go and get a fantastic job, clear all your debt, but you won't necessarily be able to move, for example, out of your situation or out of your property because you can't get a mortgage because you've collected defaults and late payments. It's a frustrating situation to be in. So it is that whole, you know, if you have problems, talk to people. That's the biggest thing I can say, is talk to people. Talk to anybody that will be able to help you.
No, I think that's really helpful. It's probably a good place to start wrapping up. Have you got anything else that you wanted to add?
Just going back to the company debt that we was talking about. And again, if you have company debt, especially with HMRC, talk to them. HMRC will not pursue you if you have an arrangement, and they are more than happy to put in arrangements. I know that from my bookkeeping business. They will put in arrangements for you wherever they can. And as long as you can maintain the arrangement, they don't show on your credit score. Money you owe to HMRC doesn't appear on your credit score unless you default on it.
That's actually a really good point, because HMRC, if you don't have an arrangement, their penalty payments can be really quite quite painful.
Yes.
So that's really lots of great bits of advice for people as well.
And the only other thing I would say to add is, if you are in debt and you carry a debt, because lots of us carry a debt, myself included, I could clear my debt tomorrow, but I don't, because there's no point, because I know I will run it back up, because a lot of us carry debt like a safety blanket. It's what we're comfortable with. Our brain is conditioned in that way that we've always paid it. It's fine. It's not a problem. Just be kind to yourself, because ultimately beating yourself up about it doesn't change the situation, and it doesn't help the emotion around it. It's the way some of us are, you know, some of us are just preconditioned to the fact of, we've got credit card debt and we move it around, but we could clear it. And a lot of us do, because it's just the way we are. But say the biggest thing I would say, when it comes to debt, when it comes to pensions, savings, protection, your situation is what your situation is. Be kind to yourself about your situation. Be positive about your situation, and then you can move forward.
No, that's absolutely fantastic. Do we have any questions? Because if not, I was going to suggest that we wrap up. If anyone does have any questions, how can they get hold of you, Sarah?
So I am on Instagram and on Facebook as a business finance mentor.
Brilliant. And just for everyone to know, it's Sarah Hayes and I'm Naomi Haynes. No relatives.
Confusing.
It's very confusing because there's just an extra N in my name versus my surname versus Sarah's. And we do very different things, but complementary as well. So thanks so much for joining us. Been a fantastic discussion, Sarah. Absolutely brilliant. And yeah, thanks for watching.